Okay. So, this next symbol we're going to be looking at, this is the XLK. What is the XLK? This is the SPDR Select Sector Fund Technology. We've been looking at a lot of indexes today. This is a good thing, right? It'd be crazy. It'd be one thing if I was showing you one company that's showing one set of technical indicators, and I'm telling you, okay, look at this, guys, it's great. But when I'm showing you 15 different, not just companies, but indexes that are all indicating a similar bullish move to come simultaneously, it really adds a lot of weight to the argument that's being made. It's like a supporting detail, right? And you learn about these things in like a logic course, right? So what is the XLK? The XLK is an index. It's not just representative of one company, but it is representative of just one country, right? Now, what country is that? It's the United States. The United States has a lot of different sectors in it, from technology to finance to energy to consumer durables, all these different things, right? XLY, XLK, XLB. A lot of them are represented by the symbol XL, and then followed by a modifier letter, right? So XL, sector, modifier letter would be KL. Here. If I just take the K off here. XL means U.S. sector. And then the modifier after that, you have F for finance, you have P for consumer staples, K for tech, U for utilities, V for healthcare, I for industrials. So if you ever want to trade just a specific sector of the economy, that's one way you can do it, right? So as far as dividends concerned, this index offers a 1% dividend. Pretty good. The QQQ, for example, is very technology focused index that you're probably very familiar with. You have access to it through your 401k. This is another very technology focused index that has a 1% dividend. The QQQ, I believe, has a 0.6%, so you're already gaining 0.4% yearly just on that dividend. Why do I compare this to the QQQ? Because not only that, but they do tend to move pretty similarly. Let's look at that. As you can see, they tend to, when they are rising, they tend to rise a similar amount, 144% across both of them. When they pull back, they tend to have similar patterns. Very similar underlyings. I'll make sure to pull up the underlyings in a second, but I'll actually leave that up there for a second for you guys to see just how comparable they are. Again, the orange line represents the QQQ. Use that as very similar. Now, what can be said on an indicator level? Well, let's look at the RSI. The RSI currently oversold, very close to that 30. This is what you want to see, right? You want to be buying low and selling high. You want to be getting in before the rises. So when the RSI is representing oversold and it's very low, as you can see right here in this pocket, what happens after that? It proceeds to show strength, right? Proceeds to show strength. On the inverse side of that, when the RSI is overbought, closer to that 70, the top end of the RSI, let's look here. What time was that? That was November 21st, December, January 3rd time. And the RSI went from that overbought territory and starts to pull back. Let's look at another example. Here we are in March 16th, 2020. When the market's kind of dipped for a little bit there, right? The RSI is oversold. It's touching this bottom line, that 30. What happens after that? It proceeds to run 134%. It's not just one company. This is a basket of assets that represents the United States technology sector. The entire technology sector ran 143%. That is phenomenal. You tend to see with the QQQ and the XLK that these two indexes that are representative of United States assets tend to outperform their peers when markets are in this bull run phase, right? They rise more in these phases. Let's look at another example, right? Let's look at, we're going to have to get rid of QQQ, but that orange line will now represent the S&P or the SPY. Now we're going to look at it over a similar time frame. I'm going to use this February 2020 time frame, kind of like line them up there so we can get a good general idea of their growth. Okay, we'll use the dip right there. As you can see, while the technology-related sectors and the QQQ ran 144% from that 2020 to 2021 time period, the S&P ran only about 90%, and the Dow ran roughly 60%. This can help you and hurt you, right? Because it runs more, it also dips a little bit more when markets pull back a little bit. And the DIA, even though it may run the least out of the three, is also the most stable. You know, if people are looking for less sporadic gains, you know, the more safer investment, that is something to look at. Might add a symbol over here. I just thought of something. Overall, this is a great company. What, on a technical level, what else do I like about this? Well, just like a lot of the major U.S. market indexes, again, keep in mind our time frame. You can tell the time frame by looking at this little W here next to the company symbol. It is the weekly. We're looking at a weekly chart now. Okay, that means every candle here represents 1 week of time. Some of the stuff we were looking at today was a monthly candle. This one's a weekly. This blue line, this dark blue line coming through here is your weekly 180 moving average. And as you can see, it tends to act as a support. And how long has it been doing this? Well, we have 1 bounce here, 2 bounce here, 3 bounce here. For bounce here, weekly. Again, see the dark blue line? I know it's hard with all the charts I have here, but let's spread that out. Boom. It has never broken below this weekly 180 moving average over the past 11 years, right? And then you have 2008, right? And 2000. So over 11 years, it has never broken below that weekly 180 moving average. Typically a sign of strength, typically something you want to see. You can identify this as a support when it's near this price, like it is right now. You could be placing your trades and expecting it to grow over time. Now, how much do we expect this symbol to grow? Well, currently, we are projecting as much as a 90% gain on the XLK. Very great index, again, representative of the U.S. technology. Let me pull up a list of its holdings for you guys real quick. So here's a list of the top 10 holdings in the XLK, which represents about 67% of its overall holdings. I like this little piece of information. It would also be nice if they would just show us all the holdings on yahoo.com, but I digress. So the number 1 holding, Apple, great company. We all like Apple. Microsoft, great company. We all like Microsoft. Nvidia, like these are all really, really, really blue chip names that we all know. The next, Visa, PayPal, MasterCard, Adobe, Intel, Salesforce, Cisco. Like, honestly, if you guys aren't holding this index yourself, you're probably holding at least 2 or 3 of these underlyings, right? So we're all on the same side in one way or another here. So using the information we've just gathered from this XLK chart, we can also kind of use that information as a supporting details for a bullish case across any of these symbols. We just recognize, well, if the XLK, the index representing US tech, is going to run 90%, it's probably a good thing for a lot of these underlyings, right? We could probably expect a lot of these underlyings, such as Nvidia or Apple or Microsoft, to run 90%, if not more than that, right? Because when an index moves a little bit, it can result in its underlyings moving a lot, right? We've covered this. So now that we've seen the underlyings, make sure to look at those real quick. Great. Somebody messaging me. Okay, I think we covered the XLK pretty in depth here. As you can see, we got this uptrending price channel here. You could even make this like green to portray why these lines are here. Buy, sell. You see this? Boom, 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 boom. Expect that, right? It's not going to move in a perfectly straight line, right? You're going to have this day where it's up pretty nice, and then it's going to pull back maybe. How much is this? How much is this? Pull back as much as 12, 13%. This is normal, right? Mid-run, right? We're mid-sprint. We're mid-sprint. We're running up, and then bottom, top, and then halfway through, pulls back as much as 13%, right? Pulls back as much as, again, 11%. Pulls back as much as 7%. These things happen, but you know, when it pulls back, that's a time to buy. Look, it touches that weekly 20. It acts as a support, that weekly 20, weekly 20, weekly 20, weekly 20. You want to be buying as it's touching that weekly 20. We want to be establishing those as support across all major market indexes. So we're going to move into our next symbol here. Hope you guys like this one. I think it's great. Again, it tends to outperform a lot of other sectors, so it's one to keep your eye on. If you guys are new here, my name's Ethan. Make sure to subscribe or follow on the various platforms. I'm currently live on Twitch and YouTube, so make sure you're subscribed or followed if you want to be informed when I go live next. We do this quite often, so make sure you're following. And we also have a bunch of highlights that come out of these streams that are available on my YouTube channel as well as Twitch. So make sure to look for those after the stream. And I really appreciate you guys for coming by. We're about to move into our next symbol. There's so many.